How worried should Indian investors be at this point in time?
The experts that we have been speaking to, they have been saying that investors should not give in to panic.
Hello and welcome to the Indian Express. This is our special broadcast from Indian Express's newsroom. And today we will be talking about the plunge in Asian markets. Major stock indexes plunged in Asia on Monday as US President Donald Trump showed no sign of backing away from his sweeping tariff plans, and investors bet the mounting risk of recession could see the Federal Reserve cutting rates as early as May. Now, to talk to us about what's happening in the market today, I'm being joined by Shumana Sharkar from the Financial Express. She is the editor of markets. Shumana, can you give our viewers the latest update?
Hi, Charu. It's a sea of red across global asset classes, and India is no different. We opened with sharp cuts, though right now we are slightly off our early morning lows, but the markets, it's a bloodbath across the markets. The key indices, Nifty, sensex are down around 4% each. The small and mid caps are down even further, almost about a 6% cut on the small cap index as we speak. And this is primarily on the back of the global rout that we have been seeing Friday evening in the US markets, and that was followed by the rout that we saw in Asian markets this morning. Nikkei, the Japanese in key Japanese index, the had trade was suspended as a result of the sharp drop in the levels. So across the asset classes, we are seeing sharp cut on tariff after the tariffs were unveiled, and concerns of global slowdown and its potential impact. And India is no different.
How are the market meltdown, uh, related to Trump tariffs? Because a lot of the viewers, they are wondering why is this happening after the tariffs were announced.
Yeah, so if I can start, if you see Nifty today, it is hovering around almost the lows that were seen in March 2024. That's 21,964 was the Nifty level in March 2024. And right now we are around those lows. And one of the big reasons is because about the uncertainty about how the Trump tariff impacting. See, per se, Donald Trump has levied 26% tariff on India, while relatively, we are better off, say, other Asian peers like say, China or Vietnam. Those countries have significantly higher tariffs that have been levied on them. But overall, the concern is that, there are many economic experts who are forecasting potential recession and a slowdown in US as a result of these tariffs, because one of the big impact of the tariff will be that prices of goods would become more expensive in United States. So essentially it will stoke inflation, and this will also expected to lead to a slowdown in growth as that these are the two big concerns in US right now. And data that came out over last week also did not support much of the growth story in United States. Been a big concern that there will be slowdown, and in case there is a slowdown, though India is relatively better off or cushioned from the tariff impact, because apart from crude, most other sources, India does have problem right now is that if there is a global slowdown, India will not be completely isolated, and India will see a an impact across. So which is why if you see in today's markets also, the big losers, sectors that have seen maximum loss, are ones that have maximum exposure to the US tariff and the global demand outlook or demand environment. So IT stocks, you are seeing there's a huge cut, and not just today, the IT stocks have been down for the past three sessions. And in the if you check the IT index, the Nifty IT index, it is not just down significantly today, but even like just today the cut is around 4%. But if you check the last five sessions, the Nifty IT index is down 6%. that in itself will give you an idea of how severe the cut is there. And is one of the big reasons is IT stocks have significant global exposure, and the problem they foresee is that in case of a US slowdown, how it affects the demand scenario. Similarly, for metals too, the big concern is, how the global dynamics play out, especially the China US tariff and counter tariff, retaliatory tariffs that have been announced by China. So there is a lot of uncertainty in the markets, and you can see that uncertainty playing out with investors kind of closing in their positions and kind of trying to recover whatever positions they can right now. So there is a huge fear and a sense of uncertainty, and that can be clearly gauged by the fact that the volatility index, which is a measure of fear in the market, that's up over 50%. And just to put that to you in perspective, on any normal given day it does not go beyond say 10% or 11% reading, like on a that not a normal trading day, but I'm saying that in times when there is a cut in the market or a sharp selling in the market, that those are the levels. But today the volatility index had surged a whopping 50%. It's in fact above 50%. So that in itself shows the kind of fear that is there in the street right now.
Okay, okay. Obviously, this sharp downturn reflects investor concerns over escalating trade wars and potential global economic slowdown. And like you said, Nifty fell below 21,900, which marks a decline of approximately 6%. That's what you said. Can you tell our viewers how worried should Indian investors be at this point in time?
See, Charu, we have been speaking to a host of market experts on Financial Express. And, one basic thing we have been from Nilesh of Kotak to Prashant Jain at 3P to Anand Shah at ICICI Prudential and even Manish Sonthalia, all the big names in the markets. If you talk to them, the sense that comes out for India is that, yes, there is near-term uncertainty, but over the longer term, the India story stays intact, and most of them are forecasting a 10 to 11% nifty earnings growth, which is like at par with what our average growth is on a 4-year trajectory. Why this particular time this looks like a huge big difference is because in the last 3 or 4 years we have had huge returns coming in on a significantly lower base after the big Wuhan led correction that was seen globally. So while they or most of them have said that those the kind of returns that we have seen in the last 3 or 4 years is not something that one can expect. But that said, it is also understood that you will see a 10 they are most of them are expecting a 10 to 11% nifty earnings growth over 3 years, which according to most is at par with our long term averages. And so as a result, the experts that we have been speaking to, they have been saying that investors should not give in to panic. And in during this huge drawdown in the markets, the huge downward spiral that is seen in the markets, you have a lot of good quality stocks also falling. So investors need to use this particular dip in the markets as an opportunity to buy quality stocks. One should not give way to panic and sell, do any kind of, undertake any kind of a distress sell. Also, the other thing that most market experts have been cautioning investors is that one should be squaring off their short positions or short term positions, because of course there will be volatility in the short term, and for investors that may not be a very ideal situation. And the other thing that most experts that we have been speaking to have been telling that one needs to focus more on the domestic Indians hugely exposed to the tariff uncertainties. So this would include your consumption driven sectors like banking, and also the infrastructure and power sector. That is what many experts that we are speaking to have been suggesting, that how the domestic driven consumer led sectors are the ones that one needs to focus on at the moment.
Okay, okay. Can you also tell our viewers, of course, amid all of this, we can also see that gold prices are falling 3%, which is a shocker. Can you tell our viewers what's the trigger right here?
Yeah, very, very important point, Charu. In fact, this is one of the biggest concerns for the markets. Also, if we see that gold, which is traditionally considered to be a safe haven buying, gold prices kind of crashed almost 4% on Friday. And this was essentially because as many traders and the market buzzes that a lot of hedge funds who are facing a huge margin calls, they had to liquidate their position in gold to kind of generate funds to address the margin calls. So you can understand, and that is why it was a big shocker and a big worry, that because one gold is traditionally considered as a safe haven buying, that is the asset that people seek refuge in when there is uncertainty in other asset classes. So this sharp fall in gold also was indicative of the kind of the extent of the brutal how brutal the cut was globally, and that kind of came through in the sharp decline that we saw in gold prices. This is also a reason why many market experts believe that we may not see a reallocation of institutional flows very immediately in our markets. The dollar is on a downward spiral. The rupee has gained some strength, and there was chatter that, can now India see the return of FII buying? But I spoke to a host of market experts between yesterday and this morning, and all of them were of the view that yes, flows will come to India, but that will take some time, because right now there is a lot of uncertainty, and even foreign investors are kind of processing the changes and the various policy changes that are being taking place.
Mhm.
So we
Do
may
you,
not see a huge kind of a flow in the near term, but yes,
no.
eventually India will
Okay. Do you think that the foreign investment outflows will put additional pressure on the rupee?
see the if we can understand the reason why we saw, if you track the foreign investors, the outflows from the foreign investors, like last 6 months or so, starting last October, you would see this also coincided with the time when the dollar index started gaining strength and the rupee was falling. So right now, just the reverse is happening. The dollar index has actually come off its highs from the January highs of 110. It is right now hovering around 102.50. And if you check the dollar indexes, its a downward spiral. It's come from 110 to the current 102, which is like nearly over for a year to date. That is like, over 5% of a fall. So dollar index, if you see, it has been on a downward spiral since the beginning of 2025. And if you kind of coincide, the foreign flows began to gain momentum last October. That also coincided with the time that the dollar index had started gaining momentum, and it kind of peaked off at 110 levels in January. So right now the dollar index is actually down 5% from its 2025 highs that it hit in January, 110 level. So overall, the dollar is on a slightly weaker pitch right now. And rupee, if we see, on Friday, it had briefly breached the 85 level, and it was trading around 84.90 for a while, on the back of the liquidity boost by the RBI. So rupee is on a slightly better ground at the moment. But let's see, we'll have to wait and watch how.
Hmm. Hmm. Shimona, there's this one reaction that we got from US President Donald Trump, wherein he said that he doesn't want stocks falling, but sometimes you have to take medicine. Why is he calling it a necessary medicine, in your opinion?
Yeah, this has been one of the most interesting observations, that if you see Trump in his first term, he was one person who was like, who would not let the stock markets fall. And if you see his first term, he was one president with a very pro market approach. But unfortunately, in this particular term, we don't see Trump hugely worried about the kind of uh, the extent of the fall that we have seen in the US markets since the tariffs have been unveiled. And it's only very recently, that's on Sunday, he came up with the quote that you just quoted, that it's a medicine. So let's see how the trade pans out, and ultimately it will be the market dynamics that will hold forth. So it needs to be seen that how this whole thing pans out eventually, because ever since the tariffs have been unveiled, we saw a big drop in US markets on concerns about inflation, on concerns about recession setting in. So, and Trump came out with this quote on Sunday. So let's see what is the kind of medicine, or what is the kind of approach that he takes going forward, or if he kind of addresses any news that can bring relief to the markets.
Absolutely. Thank you so much, Shumana, for your inputs, and to all the viewers who are looking at this broadcast. There's just one thing that we would like to say, that stay tuned to the Indian Express and Financial Express for more such updates on what's happening and the potential global economic slowdowns, probably escalating trade wars. Thank you, Shumana. Thank you so much for joining me in this conversation. And thank you, viewers, for joining this video. If you find this video reliable and informative, don't forget to like, share, and subscribe to our channel, and stay well informed while making your decisions. Thank you so much for watching.